Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. We have a busy day following the CPI data we had this morning, coming in lower than expected on the inflation front, and that's driving stocks higher. So, of course, we have the biggest winners in the tech stocks and the growth stocks. Nasdaq's up 190 basis points as I'm recording this, in the S&P 500, not too shabby. That's up 150 basis points right now. And the VIX continues to bleed lower as this market's grinding higher. The VIX still above 20, but it's getting closer and closer. We're at 20.09 right now. So a lower VIX, higher equities, a lot less reason for concern apparently. And if you look at the interest rates, those are coming in. An expectation of a 75 basis point hike in September. That's coming in strong. We're now under 50 on those expectations. So maybe we won't see 75 basis points at the next Fed meeting. And that's all happening really quickly. We have really fluid economic data too. It's all changing very quickly. Remember, we had a really great jobs report for the month of July. Interesting to see hot jobs, weaker inflation at the same month. Now, there's a couple flies in the ointment I just want to point out though real quick. The big reason for the lower than expected inflation was energy prices coming down really quickly. If you strip out food and energy, we were actually higher than expected on inflation. And of course, we have a very, very tight jobs market as seen by the jobs data we saw last week. So certainly very interesting. There still could be some inflationary pressures, very strong inflationary pressures going forward, especially if the Fed decides to get dovish here. We have wages that were higher than expected in that jobs data. We have a tight jobs market. If the economy gets hotter and we have that tight jobs market, well, inflation's not going to come down anytime soon. And by the way, inflation's better than expected. That's great. We're all happy that energy prices are lower. I'm really happy that it costs a little bit less to fill up my car, but gas prices are still way higher than they were a year ago. And we're at over 6% in inflation. That's not sustainable for the long term. We need to get that down to 2%, and that's not going to happen unless the Fed actually acts. It's not going to happen on gasoline alone, especially with those inflationary pressures I mentioned in the jobs market. For Equity Armor Investments, I'm Joe Tigay.